As the cryptocurrency market continues to navigate tumultuous waters, the impending decisions from the Federal Reserve stand to play a pivotal role in shaping the future of digital assets like Bitcoin. Recent reports suggest that the Fed may be poised to intervene in the financial markets, which could substantially influence Bitcoin's price trajectory in the coming months. In the wake of a notable drop from its all-time high of nearly $110,000, Bitcoin has found itself in a precarious position, hovering around $80,000 amidst fears of a potential price crash fueled by panic selling. This volatility has coincided with broader market trends, including fluctuating sentiments regarding U.S. trade policies under President Donald Trump and increasing recession risks. As traders search for stability, crypto trader Arthur Hayes has offered insights suggesting that a significant shift in Federal Reserve policy could ignite a resurgence in Bitcoin's value. Hayes, co-founder of the crypto derivatives platform BitMex, emphasized the historical tendency of the Fed to inject liquidity during periods of financial distress. When there's financial distress, they always print money. It doesn't matter the political leanings, he stated. With the Federal Reserve's next interest rate decision anticipated imminently, speculation abounds regarding whether the central bank will signal a pause in its current quantitative tightening strategy. Analysts from Bank of America have indicated that the Fed may opt to halt its balance sheet runoff program, a move that could provide a much-needed boost to the crypto and stock markets. The urgency of the Fed's meeting is underscored by the looming threat of a $9 trillion wave of debt maturity this year, which, if not managed properly, could disrupt market stability. Noel Acheson, editor of the Crypto is Macro Now newsletter, noted that any signals from Jerome Powell, the Fed chair, indicating a shift back to a more accommodating monetary policy could mark a transformative moment for the crypto landscape. Acheson remarked, "If Powell mentions the end of quantitative tightening in today's statement, that would signal that we're in a new monetary regime." As traders closely monitor developments, Hayes has made an ambitious prediction, forecasting that Bitcoin could soar to as high as $250,000 by the end of the year if the Fed's policies favor liquidity injection. This echoes the conditions seen during the last major Bitcoin price boom in late 2021, when expansive government stimulus efforts spurred a massive influx of capital into the crypto market. In the meantime, the crypto community is witnessing not only market fluctuations but also cultural integrations that highlight the growing acceptance of digital currencies. A recent event. The Rangdi Big Bang Holi Festival in Chennai saw over 15,000 attendees celebrating the Festival of Colors while engaging with cryptocurrency through partnerships with platforms like CoinEx. This fusion of tradition and technology emphasizes the potential for cryptocurrencies to penetrate mainstream culture and facilitate broader understanding among the general public. Looking ahead, the outcome of the Federal Reserve's meetings will be crucial in determining the short-term future of Bitcoin and the broader crypto market. With traders anticipating potential rate cuts and a shift away from quantitative tightening, a renewed wave of liquidity could open the floodgates for a significant price rebound. As the landscape evolves, both market participants and casual observers will be eager to see how these developments unfold in the coming months. In a significant move that could redefine the financial landscape of Minnesota. Senator Jeremy Miller R. Winona has introduced the Minnesota Bitcoin Act SF 2661. Unveiled on March 18, 2025, this groundbreaking legislation aims to position Minnesota as a leading state in the cryptocurrency sector by allowing the state to invest in Bitcoin and other digital currencies, modernizing payment methods and expanding financial options for residents. Senator Miller, who has undergone a transformation from skepticism to advocacy regarding cryptocurrencies, emphasized the urgency of seizing the moment in this digital era. "I believe global digital currencies are here to stay, and it's inevitable that they become more mainstream," he stated. The proposed act is designed to harness the potential of cryptocurrencies as versatile digital assets, which can serve not only as investments but also as tools for global transactions and inflation hedges. Miller's goal is to create economic opportunities and enhance prosperity across Minnesota by strategically positioning the state at the forefront of the cryptocurrency revolution. If passed, the Minnesota Bitcoin Act would introduce several key provisions. The Minnesota State Board of Investment (SBI) would be empowered to allocate state assets to Bitcoin and other cryptocurrencies, diversifying traditional investment portfolios. Additionally, state employees would gain the option to include cryptocurrencies in their retirement accounts, thereby enhancing their wealth-building strategies. The act also seeks to modernize state tax payments, allowing Minnesotans to settle taxes and fees using Bitcoin, thereby increasing convenience and flexibility in financial transactions. Moreover, it proposes to exempt investment gains from Bitcoin and other cryptocurrencies from state income taxes, incentivizing both residents and businesses to engage with this emerging financial landscape. Minnesota is not alone in its pursuit of cryptocurrency integration. Other states, including Texas, New Hampshire, Colorado, and Utah, are also advancing legislation to embrace Bitcoin and digital currencies. For instance, Texas lawmakers are working on establishing a state-managed Bitcoin reserve, while Colorado and Utah have begun accepting cryptocurrencies for tax payments. This growing trend reflects a national shift as various states seek to capitalize on the benefits of cryptocurrency adoption. The timing of Minnesota's legislative initiative coincides with broader national discussions around cryptocurrency regulation. At the federal level, proposals for a strategic Bitcoin reserve have emerged, indicating a growing recognition of Bitcoin's potential role in the traditional financial system. As the landscape evolves, Minnesota's proactive approach could set a precedent and inspire other states to follow suit. In related news, Bitcoin's market performance remains a topic of intense scrutiny. Following a significant drop from its all-time high of nearly $110,000, Bitcoin is currently hovering around the $80,000 mark, with traders closely monitoring this critical support level. Market analysts speculate that upcoming Federal Reserve policy decisions may influence Bitcoin's trajectory. Federal Reserve Chair Jerome Powell faces the challenging task of balancing growth and inflation, a situation that could lead to increased liquidity in the market and potentially boost Bitcoin prices. As the cryptocurrency market continues to fluctuate, the interplay between state legislation and federal policy will be crucial in shaping the future of digital currencies in the United States. Minnesota's Bitcoin Act represents a bold step forward in this evolving narrative, and its successful passage could herald a new era of financial innovation and opportunity, not just for Minnesota, but for states across the nation. As legislators and market participants navigate the complexities of this digital frontier, the coming months will be pivotal in determining the trajectory of cryptocurrency adoption and regulation in the United States. In a significant turn of events for the cryptocurrency market, investment firm Bernstein has forecasted a potential 64% surge in Coinbase stock, projecting a price target of $310, up from its current valuation of $188. This optimistic outlook comes amid the Trump administration's recent initiatives to promote pro-crypto policies, which analysts believe could substantially benefit Coinbase, one of the largest cryptocurrency exchanges in the United States. Bernstein analyst Gautam Chugani attributes this bullish sentiment to the administration's commitment to fostering blockchain innovation and establishing clearer regulatory guidelines. The administration has already outlined plans to integrate Bitcoin into the financial system, notably through the creation of a strategic Bitcoin reserve. This reserve will initially comprise Bitcoin seized in criminal investigations, with intentions to broaden its holdings in a budget-neutral manner. Coinbase CEO Brian Armstrong, who recently met with White House officials, hailed this initiative as a pivotal step that may inspire similar actions from other governments. He further announced that Coinbase will expand its workforce by over 1,000 employees in response to the favorable regulatory climate. Despite Bernstein's upbeat forecast, the broader analyst community exhibits a mixed perspective on Coinbase stock performance. Out of 26 analysts, 11 recommend buying while 15 advocate for holding the stock. This cautious stance follows a challenging start to 2025 for Coinbase, with its stock price declining by 24% since January as post-election enthusiasm waned. However, Chugani is optimistic about revenue growth, especially from non-trading services such as stablecoins and staking, which he anticipates will expand at a robust annual rate of 31%. The Trump administration has also appointed venture capitalist David Sachs as the nation's inaugural crypto czar, signaling a strong commitment to advancing pro-crypto legislation. A stablecoin bill is expected to be introduced in the coming months, with the Senate Banking Committee recently approving the Genius Act, which establishes guidelines for stablecoin issuers and mandates compliance with anti-money laundering laws. Bo Hines, executive director of the President's Council of Advisors on Digital Assets, indicated that this legislation could reach the President's desk within 2 months, further enhancing the framework for digital currency regulation in the U.S. The broader implications of these developments extend beyond Coinbase. As the administration pushes for regulatory clarity, the Securities and Exchange Commission (SEC) has initiated a task force led by Commissioner Hester Pierce to develop crypto-specific regulations. Additionally, Coinbase has secured Financial Intelligence Unit registration, allowing it to resume operations in India, a move that underscores its global ambitions. However, the government's approach to the Bitcoin reserve has drawn some criticism from within the crypto community, with concerns regarding its long-term implications. Armstrong defended the strategy, emphasizing the potential benefits it could yield over time. While Bitcoin's price did not react immediately to the reserve announcement, Armstrong expressed optimism that the U.S. government's commitment to holding Bitcoin would ultimately support higher prices in the long run. In contrast to the positive developments surrounding Coinbase and regulatory advancements, the crypto landscape has also faced challenges. Prominent figures such as billionaire Mike Novogratz have expressed skepticism regarding the recently launched Trump memecoin, citing it as a distraction that undermines the serious efforts toward establishing a robust crypto framework. Novogratz's comments reflect broader concerns in the industry about the potential for political coins to serve as vehicles for undue influence. As the U.S. government continues to shape its digital asset policies, the future of cryptocurrencies appears poised for transformation. The anticipated legislation and regulatory developments could significantly alter the competitive landscape, introducing new dynamics among banks, fintech firms, and crypto exchanges. As the market evolves, all eyes will be on how these changes will impact investor sentiment and the overall trajectory of digital currencies in the coming months. In the ever-evolving landscape of cryptocurrency, recent market movements have sparked significant attention as traders and investors closely monitor the implications of impending Federal Reserve policy shifts. Ether, one of the leading cryptocurrencies, surged nearly 7% in the last 24 hours. Solidifying its position as a key player amidst fluctuating market conditions. As Bitcoin hovers just below the critical $84,000 mark, the cryptocurrency sphere braces for what could be a pivotal moment influenced by the Federal Open Market Committee (FOMC) meeting. Ether's recent rally comes as traders anticipate the outcomes of the FOMC meeting, where the Fed is expected to maintain interest rates. The surge in ETH has not only outpaced Bitcoin, which experienced a modest 2% increase, but also coincides with a broader trend among major cryptocurrencies. Notably, memecoins like Dogecoin also joined the rally, reflecting a renewed interest in riskier assets within the market. Market analysts highlight that Bitcoin's stability around $80,000 is critical. A decline below this level could signify a trend reversal and shake investor confidence. BTC has found some support at the $80,000, but that seems tenuous at best amid broader macro weakness. Noted traders from Singapore-based QCP Capital. This sentiment underscores the importance of the upcoming FOMC announcement, which analysts believe could either bolster or further depress market sentiment. Interestingly, Ether's gains are occurring in the backdrop of significant developments within the Ethereum network itself. The impending Pectra upgrade aims to enhance scalability and user experience through a series of Ethereum improvement proposals (EIPs) designed to optimize performance. If successful, this upgrade could position Ethereum favorably against Bitcoin, particularly in a market seeking innovative solutions.
The interrelationship between Bitcoin and traditional safe haven assets has also been a focal point. With gold recently surging past $3,000, some analysts are observing a potential inverse correlation between Bitcoin and the yellow metal. Ryan Lee, chief analyst at Bitc Research, remarked despite its historical correlation with gold as a macro hedge, Bitcoin's current divergence, falling while gold rises, suggests it's acting more like a risk asset. This observation signals a shift in investor behavior, one that may be influenced by ongoing uncertainty surrounding Fed policy and broader economic indicators. As the cryptocurrency market anticipates the Fed's next move, speculation is rife regarding potential policy changes. Traders are hopeful that a dovish stance from the Fed could breathe new life into Bitcoin and other cryptocurrencies, potentially reversing recent downward trends. Arthur Hayes, a prominent trader, predicts that the Fed may soon intervene to stabilize markets, potentially leading to a renewed bullish sentiment in the crypto space. The outcomes of the FOMC meeting and subsequent Fed communications will be crucial in shaping market dynamics in the coming weeks. As traders digest the implications of these developments, the cryptocurrency community remains poised for potential volatility and opportunity. The interplay between monetary policy, market sentiment, and technological advancements within platforms like Ethereum will likely dictate the trajectory of major cryptocurrencies moving forward. In summary, as Ether leads the charge with significant gains, the cryptocurrency market is on high alert, awaiting decisive signals from the Federal Reserve. The results of the FOMC meeting could serve as a catalyst for either a resurgence in Bitcoin's fortunes or a deeper entrenchment of market uncertainty, leaving investors and analysts alike to navigate the complexities of this rapidly changing financial landscape. In a significant development for the blockchain ecosystem, Tron founder Justin Sun has announced that TRX, the native token of the Tron network, is set to launch on the Solana blockchain. This integration not only marks a pivotal moment for TRX but also illustrates the growing trend of cross-chain collaborations among decentralized finance DeFi platforms. As the digital currency landscape continues to evolve, such strategic partnerships are likely to enhance user experience and liquidity across different networks. Justin Sun, a prominent figure in the crypto world, expressed his enthusiasm for the integration, stating, "The launch of TRX on Solana represents a monumental step towards creating a more interconnected and efficient blockchain environment." This sentiment reflects a broader ambition within the crypto community to foster interoperability between different blockchains, allowing assets to move seamlessly across platforms. The decision to introduce TRX on Solana comes amid a tumultuous period for the crypto market, where investor sentiment has been shaken by recent price declines across several major cryptocurrencies. Bitcoin and Ethereum have experienced significant drops, with Bitcoin slipping from a recent high of $84,500 to around $81,000. Other altcoins, including Cardano, Stellar, and Solana itself, have also faced steep losses, contributing to an overall market decline of approximately $1 trillion. The current market dynamics are characterized by a heightened level of fear among investors, as indicated by the Crypto Fear and Greed Index, which has plummeted to a fear zone rating of 25. Market analysts have attributed this downturn to a combination of factors, including geopolitical tensions, particularly the ongoing trade war initiated by the U.S. government, and uncertainty surrounding upcoming Federal Reserve meetings. The recent imposition of tariffs on key trading partners has further fueled fears of an economic recession, leading to a conservative stance among investors who are hesitant to engage in riskier assets like cryptocurrencies. As the Federal Reserve prepares for its next meeting, the cryptocurrency markets are on tenterhooks. Investors are keenly awaiting indications of future interest rate decisions, which could have profound implications for altcoins like TRX, ADA, and Solana. A potential announcement of rate cuts could serve as a bullish signal, revitalizing interest in these assets. However, the Fed has consistently indicated a cautious approach, emphasizing that it will not rush into rate reductions. In this context, the integration of TRX onto the Solana blockchain could serve as a dual benefit.
Not only does it enhance the utility and accessibility of TRX, but it also positions Solana as a competitive player in the DeFi space, particularly as it seeks to capitalize on the rising interest in cross-chain solutions.
The collaboration could attract new users and liquidity to both platforms, potentially stabilizing their prices in the face of current market volatility.
As the crypto landscape continues to shift,
the implications of TRX's launch on Solana will be closely monitored by investors and analysts alike.
The success of this integration could pave the way for further collaborations across different blockchains, reinforcing the importance of adaptability and innovation in the rapidly changing world of digital finance. With the market at a pivotal juncture, the developments surrounding TRX and Solana may well signal a new era for blockchain interoperability, setting the stage for exciting advancements in the DeFi sector.